You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time to rock out once again with the option block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If I sound a little bit different, I'm coming to you one final time from the Southern studio here. So looks like, thankfully, the Southern gods are smiling upon us today. So far, at least, I cracked the microphone, and we've yet to see storm clouds on the horizon. That could change at any moment. So far, pretty much every show I've done has drawn the ire of the storm gods down here. But we'll see. Keep our fingers crossed and see how things unfold. Of course, you guys know the drill. Even though we're in the Southern studio, doesn't mean the live shows aren't still on the same schedule. So every Monday and Thursday for the option block, 3 p.m. Central, 4 p.m. Eastern. By the way, I say that, but this Thursday there will be no live option block because we'll all be off celebrating just basking in the glow of the holiday, which is the 4th of July. I figured I'll be nice. I'll give the folks here on the old show, the all-star panelists, a little bit of a break. Also, I'll be on a plane, so the two of those things combined will make for difficulty to do the show. So rather than have them come in and suit up in my absence, I know that's very challenging for them, I decided to be beneficent, give them the gift of a day off. We'll be back on Friday with our Vol Views and our Twifo and all that good stuff. So stay tuned for that. And, of course, however you listen live after the fact, hit us up. Questions, comments, insights, pearls of wisdom. We do indeed like to hear from you guys. And speaking of my aforementioned fellow all-star panelists, let's see who we got. Let's spin the wheel and see who's who and what's what and who's where. Let's start off. Let's go to the hinterlands of a little town I once knew called Chicago, where we are joined by Uncle Mike Tosaw from RCM Wealth. Actually, no, from St. Charles Wealth Management. I almost said it. Uncle Mike, welcome back to the show, sir.
Holy cow, get this guy back into Chicago. He says I'm from Chicago and not St. Charles. He gets my company wrong. Ay. Things are crazy down in the South.
They are crazy. I said from the hinterlands outside of Chicago, too, in my defense.
I didn't hear that part.
Technically, the umbrella does cover. I did not say St. Charles specifically, though. You're right. But I figured the hinterlands covered.
My apologies.
Once it gets beyond the range of the L.
Retracted.
Once it gets beyond the range of the L, it's all hinterlands to me. So if I can't
out of the loop and he's lost.
If I can't L it there, if I can't see it from the Sears Tower, then it doesn't really matter to me. All right, and moving a little bit farther away to a place where you can't see any of this stuff from anywhere in Chicago, even the heights of the Sears, now Willis, and now something else indeed again, but we'll just call it Sears for the sake of reference, is the Rock Lobster himself. Mr. Rock Lobster, a little birdie told me you had a birthday recently. Happy birthday, sir. Did you do anything fun?
What did I do fun? I went to the local industrial store and bought a grinder. My kid wants to make a knife out of a bastard file, so he's grinding away, although he's not doing it today. He's decided to go tubing. So that's what I bought, a grinder.
You bought a grinder to hand make your kid a knife.
I am not doing the making he is. He's just grinding away with a steel grinder. It's actually quite exciting. Like, wow, that's a lot of sparks.
Yeah, well, there is something to be said for a little metal work, a good blacksmithing never hurt. He may build up some forearm strength. Get the bellows going, get the hammer going. You never know. Maybe he'll find everything old is new again. Blacksmiths, I hear, are coming back into vogue in the 21st century. Maybe he'll be in high demand.
All the rage.
He'll be in high demand one of these days. Speaking of birthdays, isn't today like the Meatballs' birthday? You guys are like back-to-back birthdays over there in the pit. Was that part of the deal?
Yes.
In order to work there, you have to have a birthday within a 1-week period?
Exactly. Mark demands everybody have a birthday right around his. So mine is only a couple days before his. I think he actually did some volunteering for the Greenwood project today. So he is actually out there volunteering on his birthday. So
wow, that's surprising.
There you go.
Especially given the fact that I know it's a momentous birthday for him today. I think he turned 75 today. So it's
something
good to see someone of his advanced years still so spry and still.
At least he's in the double digits,
yes,
for sure.
Yes, exactly. Deep. He might be hitting 11 today. We don't know. We'll check in. Meanwhile, let's check in with the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. Like the name implies, this is the portion of the show where you talk about, surprise, surprise, what was trading. And another weird one on the old street today. Started off with a little bit of grim, a little bit of dire news. Canada's like, right back at you. $13 billion in tariffs. And everyone said, oh no. And the market sold off and vol rallied. And then, as tends to play out in these types of things, towards the later on in the day, everyone's like, it's just Canada. It's just maple syrup and fish. I'm joking, of course. And the markets decided to rally. And by the end of the day, we saw a lot of green on the screen and red in the vol space. Most of the major indices, kind of depending where you're looking, a little bit of a mixed day here. The S&P up about fractionally 0.25%. The Dow almost unched on the day. Tech-heavy NASDAQ getting a nice little boost, up a little over 0.5% on the day. And after being up over 17 at one point, let's see how high did it get intraday here. 1808 was the high for VIX cash today, settling off back south of the 16 handle, 1575 or so, off about a third of a handle or so, which is looking good. For my vol views prediction, now it's just got to kick in a couple more handles worth of holiday erosion, and I'll be good to go for that one. After this week, Mark and I were 3 handles off. When no one factored in the errant Trump, the Trump trade war tweet, which is always lurking out there, and once again came into pass and really made our predictions look wildly off. But we're hoping for smoother pastures this week. Let's go back to the hinterlands outside of Chicago, where we are joined by Uncle Mike. Uncle Mike, sir, another weird day, another mixed day. Starts off, oh no, all terrified, trade war. Then it kind of settles in by the end of the day. What caught your eye in today's activity, sir?
Well, the first week of July is always kind of a unique week in that it's the beginning of a quarter. So, of course, funds are repositioning themselves, doing what they do at the beginnings of quarters, new money coming into the money leaving the markets. But this is always kind of one of the more unique ones in that it's a holiday week at the same time, especially this week when this is always my least favorite time to have 4th of July is on a Wednesday. I always wish that we could have it another day, but since I didn't invent calendars, I guess I really shouldn't complain. But it's kind of unique from the standpoint that it's lower volume typically when you have a holiday week, but it's sometimes you can get some more institutional volume because of the fact that it's the beginning of a quarter. So today, pretty much if you look at the overnight action, a lot of the market downturn happened going into the open today. So we actually had gapped down a little bit. Like you said, it seemed like tariffs were kind of the thing that were driving the markets downward. But then cooler heads prevailed from what it seems. The market got back to even. I think the market realized not only, hey, it's just Canada, nothing against Canada, by the way, but also, hey, this is a holiday week. It's not proper for the market to be down this many points on a holiday week. We need to get back to about even and make it a nice boring week like holiday weeks typically are. That's kind of was my read on the market today in terms of what was happening from the standpoint of what's lighting up my tape, that type of thing. Silver actually went down a little bit today, about 1.5%. So we did get a little bit of a pullback around that area. And then in terms of the overall sectors of the marketplace, we also had something of note in the slippery stuff, oil. There was some talk, I believe, I forget if it was Friday or if it was over the weekend, in that Trump had made a deal with one of the friendly countries of the Middle East, and that they would help to produce more oil. So that way we wouldn't have such a higher oil price. And so with that, we see energy down a little bit on the day. So we did have that kind of dragging the market a little bit. And then in terms of the actual oil prices themselves, oil itself was relatively flat on the day. So always interesting to see how things react over geopolitical things. But once again, it's a holiday week, so I don't think it's wise to read too much into anything, good or bad, quite frankly.
Yeah, wise words for these tumultuous times that we find ourselves in today. You don't like the headlines, you don't like what's going on in the market, just wait a few minutes. Chances are there's another shoe lurking out there to drop. Mr. Rock Lobster, when you weren't busy celebrating myriad pit-related birthdays out there, what was catching your eye? And first off, what are we looking at zone-wise here in VIX land, sir?
Well, we are in zone 2. We're stuck in zone 2, and we're not leaving zone 2 because of all this trade stuff. What's funny is, we got the same, like, okay, we're going to put tariffs here. We're going to put tariffs there. We're going to put tariffs there. We're going to put tariffs there. And what I'm waiting for is, what kind of back channeling is going on? Are they actually going to get somewhere with all of this? Because usually, there's a lot of tweeting, and then at the end of the tweeting, there is usually some sort of something that happens. Now, whether it gets done or not, I don't know, but it makes some headlines, and then the White House declares victory, and you kind of go forward. So right now, this has kind of been dragging on for a while. In many sectors, although tech kind of rallied hard today. So, you don't know really what's going on behind the scenes, but it feels like every morning there's a tweet on trade. You buy the dip and you fade the volatility, just lean into it a little bit, and it works. So it's until that stops happening. I mean, I'm not a very big iron condor trader, but it feels like that's the trade. 150 handles out and in the SPX, and don't do anything for a couple of weeks, because all we do is go up a little, down a little, up a little, down a little. It's just a real, until we break out of this cycle, and we do have earnings coming, but, we have another, I would say, week and a half until they really start coming in hard. So, I am surprised that the vol is here, considering, VIX was up quite a bit this morning, traded 18 or almost a little over 18. But we didn't even have a 1% move. So it's literally like they blow everything up and go, the sky's going to fall, and then it doesn't fall. And then all the fun's over, and we spend the rest of the day just going back the other direction. So if that's what you like, that's the market we have right now. And besides all the banks kind of surviving their stress tests and all that kind of stuff, it feels like sort of benign and normal. We've just seen a lot of this, and as Mr. Tosaw says, we're seeing more of it, more of the same.
A lot of more of the same. I got a feeling a lot of people, this is kind of a lot of people expected, I think, last year a bit, maybe just random and just nonstop injections of volatility from the White House via Twitter. And we didn't really get that last year. We saw the tweets coming up, but it didn't really seem to impact the market. This year, suddenly with the trade war, all of a sudden they seem to have found some teeth, some legs. Doesn't mean we're the vol is here to stay. It erodes as quickly as it comes, but still, these little injections of vol. I think a lot of people were maybe expecting more of this last year, and last year we'd see Rocket Man stuff and this and that, and nothing really seemed to amount to anything in terms of volatility. Speaking of which, we have a listener here, J3 Dingle, listens quite a bit. He's sending in what he thinks should be the title for the episode. He says, all Tariff-Ied. You get it? Tariff-Ied? There you go. A little pun action for you out there. Our listeners never been known to turn their nose up at a good pun. I have, but our listeners, they seem to love them. Speaking of what else people are loving, people clearly loving options again, at least in June. Overall numbers coming out of our friends, the OCC, because today is the 2nd, so we got the numbers coming out for June. Highest June Options volume on record, total cleared contract volume. This is everything they clear now, so a bunch of stuff in there. But total clear volume hitting 409 million contracts. That's up 6% from June of last year when they were at 387.5 million contracts. Year to date, ADV is up 22% still. So, we knew that big bump came from February, and we know it's been kind of trailing off a little bit, but still. Overall, ADV is still robust. 21 million contracts. That's up from 17.7 this time last year. Let's drill down a little bit. Let's get into the listed options. That's what we're all here for. And overall exchange listed options volume, 401.4 million contracts last month. That's up 7% from June of 2017, the highest June on record. For total options volume, let's see, equity options volume, let's drill down a little bit more, a total of 363 million contracts. That's actually an 8% increase from June of last year. Let's go a little bit farther down the rabbit hole to ETFs. ETF options volume, 142.2 million contracts. That's a 5% actually decrease from June of the year before. It's kind of interesting. You'd think ETF volume would have had a nice little bump there. Index options volume was actually unched. If you remember the last few months, index volume's actually been the one kind of dark spot aside from the futures, which has always been down of late. This last month they managed to kind of break even, pretty much up about 0.5%, 38.3 million contracts. Futures, also worth noting, OCC does clear some futures, mostly VIX and a little bit of Bitcoin. And futures, 7.7 million contracts in June. That's down 42% from June of last year. So all you were thinking maybe the impact, shutting down of XIV and the neutering of SVXY and all that good stuff didn't really have an impact on things like the futures. Maybe think again. All those people out there writing these elaborate treatises about what's going on with VIX Futures. Why is no one buying? Maybe people just don't want to buy VIX Futures here. I think they probably just look a little bit closer to home at some of those products, shall we say, unwinding and or not so much anymore, really. And that's probably a more realistic answer. Let's see. OCC year-to-date ADV is actually 19% lower than it was this time last year. So interesting stuff. Speaking of futures and speaking of other things that are indexy, SPX also celebrating its 35th anniversary coming up. SIBO sending out, kind enough to send out some data points on the SPX. But 35 years of SPX is crazy. That's hard to imagine. The first half of 2018, it experienced the most volume ever for the first 2 quarters of a year, total of 180 million contracts trading. They love to quote their notional value, 453 billion worth of notional value. Remember, SPX, a beefy, meaty contract. Year to date through June, ADV is 15.8% ahead of where it was this time in 2017. So maybe the overall index options volume is kind of unched at OCC, but SPX volume at least looking pretty robust. Of course, back in February, they set new records over there as well. So there you go, a little bit of some milestones there. First off, Mr. Rock Lobster, you were out in the S, I believe, as well. What do you think? 35 years of the SPX, sir.
Really? 35?
Yeah, I had the same response.
Well, I'm trying to dig because my option life started in 1989, which was, oh my word, right out of college. So
was 700 years ago.
Oh my God, what was that? 29 years ago. And I remember, and the SPX was just, it was busy, but it wasn't, and I didn't get into that pit till 94. So yeah, I guess so. I mean, yeah, it is now kind of the big behemoth of the pit that it is. But oh my word, things have changed in there. Actually, what's funny is it hasn't really changed a lot. It's just a little bigger.
I was gonna say, yeah, it hasn't changed that much. I came into it in '97, which is right around the time that seemed like SPX was kind of taking over for the O. And the O was the big thing, the OEX, the S&P 100 listeners, and that was kind of the big dog for a long time. And then it seemed like when I got there in the late 90s, it was SPX was starting to really become the dominant force. They were just starting to expand the pit. It was growing. Everyone was sending guys out there. It was becoming the big thing. The 1.5 was kind of going the way of the dodo. You didn't hear that quoted too much anymore, Mr. Rock Lobster, by the time I got out there. So yeah, interesting stuff. But you're right, 35 years. I was a little surprised by that number as well. Interesting stuff. Let's see what else. Speaking of surprises, let's see what other surprises the day holds in store for us, it is time to move on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
I will miss when we're back in the studio, listeners. I will miss these, shall we say, these legacy drops that we're using down here in the Southern studio. They're fun. You guys should check out the podcast, Mr. Rock Laps, Uncle Mike, to hear some of the old option block transitions we've been using down here. They're kind of fun. Speaking of kind of fun, maybe it wasn't a very fun day for you if you're one of these Tesla files out there. We know you're out there. The stock taking it on the chin today. Not too bad, off a little over 2%. Handles-wise, looking a little bit scarier, off nearly 8 handles, right around 335. Got as high as, 370 not that long ago, and now back to 335. So it's a coin flip. 370 again or 300. Which will hit next? We shall see. But that's not what we're looking for when we're talking Tesla. No, listeners, that's not our thing at all. We don't care about sabotage and all the other dramatic headlines that are coming out of there on an almost daily basis. Nope, we care about one thing, and that is crazy far out of the money catastrophe puts in Tesla. Were they trading it up again? And the answer today is a resounding yes, with the Jan 2019 50s kicking it off to the tune of 1,566. These things are really starting to light it up. They have a life of their own now. We've kind of created a monster here on this show, and now it's just become its own beast. About 57, nearly 58,000 open on the strike, so ton of paper. Worth noting, the 25 puts doing 300 today, and the 20 puts, again, this is Jan 2019, so think about that. Jan 2019, 50, 30, 25, and 20 puts, all lighting it up. Just think about what has to happen in Tesla for those puts to even become remotely relevant. Now, we've seen, of course, that it doesn't take a huge sell-off to have those things kick in. Shall we say the Vega effect has a nice little pop. Those puts alone have gone from 30 cents to $3 to right around $1 again right now. So they've had a move, even though they're not high delta. So they can move, but still interesting nonetheless. Those 20 puts going for a whopping 20 cents right now. Let's go on out a little bit farther, all the way out to Jan 2020. A pretty busy day in the Jan 2020 50 puts as well. It's about 350 hitting the tape. Those are worth about $4. If you're wondering, listeners, about 20K open on that strike. So that strike has been growing steadily and continues to do so. Also, $1.50 of the Jan 2020 20 puts. Say that 5 times fast. Hitting the tape. Over 11,000 open on that strike as well. Those are trading about $1.20, if you're wondering. Mr. Rock Lobster, how many did you Carmen Line folks sling today of these nonsense Tesla puts, sir?
Well, we wanted to sling a lot of them, but in the morning, Tesla actually looked pretty good. When Musk, he said, we made production targets. It's weird when he comes out with good news, and then I think they sold it off. So as much as I would have liked to swing these things, we did not swing a gosh darn one, unfortunately.
Speaking of garbage puts, I talked Mr. Meatball into trying to sling at least some of those VXX Jan 10s. I think he wanted to buy 1,000 or 2,500. Did he end up getting filled on those?
For nothing, pretty much.
That's the best kind of put, isn't it?
Well, it is. The problem with VXX right now is it's up for the year. So one of the best things about the start of the year is that it's got to start decaying at some point, but we keep getting all these pesky vol events that ruins everything. So what the heck are you going to do? So I think the theoretical low now for me with VXX is around 20. So it is looking less likely for the 10 puts to kick in unless we have a period like 2017 of rising stock prices and benign tweets, which I don't think we're going to get.
Uh-oh. So you're poo-pooing his massive block of worthless puts, sir?
Yeah. Well, the price was right. So that helped. That helps.
The price was indeed right. Let's see if the price was right as we move on along here on the odd block today. I think a newcomer to the odd block. I don't think we talked about them before. This is Limelight Networks, Inc. This is a ticker symbol LLNW, closing today at a whopping $4.72, up about a quarter, so up about 5.5%. If you're not familiar with them, they operate a distributed network and provide a suite of integrated services such as the Limelight Orchestrate platform. So their content delivery and related services, this description is about as vague as it gets. But that's kind of what they do in a very vague nutshell. They do about, almost 1,000 contracts a day. So not bad odd block volume. Today doing about 12,000, 17 to 1. And it seemed appropriate, Mr. Rock Lobster, to kick off with these bad boys, because considering it's a holiday week and we're going to be off the rest of the week, is guess what they were trading? What calls they were trading today, sir? I'll give you a hint. What holiday is coming up?
I'm going to say they're trading the July 6th calls.
Oh, you're so close. You're so close, sir. But no, indeed. They were the July 4s. They were buying the July 4 calls a whopping 10,000 times for what price do we have here? 60 cents, listeners.
Oh, so, I was thinking strike. I was thinking term instead of strike. What a maroon.
Oh, I thought you were joking. I was just giving you the benefit of the doubt that you were being very funny. You were actually serious. That's kind of scary. All right, let's just keep moving from that one.
The weeklies are the 6.
I was talking strike. The July 4s. That's perfect. Perfect way to kick off the segment for this week until you pooped all over it, sir.
Oh, my gosh. You know, that's what happens when I don't read all the show notes. I end up just – and you don't even send them to me.
Oh, I did not. You're right. That is.
I
didn't. You're right. I kind of just created them for my own edification.
Yeah, whatever. Like, I mean, figure out this one. Okay.
Well, I figured you could reasonably intuit what's going on there. How I'm kicking off.
Realize though, I can't do the easy ones.
That's
like,
true. That is
call spread. Can't do the call spread.
That is your nemesis.
The long delta stock goes up. Failure. Holiday this week. July 4s.
July 4 calls. How could you possibly interpret that one? I'm just going to make sure as we're talking, I'm going to send you the notes right now, sir, so you could play along the home game, so you have no further issues like this.
Oh no, I'll screw another one up.
You probably will, but
just to entertain the listeners. Well, it's a problem. I'm looking at VXX and I have some July 6 on. Like, I think it's probably weighing too hard on my brain.
Yeah, I think you're too obsessed with those no cent puts out there in Jan. Instead, let's look at a chart here and see how our friend Limelight Networks has been doing over the past year. Let's see if these 4s even make sense. And yeah, this thing's kind of been all over the place. A year ago, it was $2.90. So it's been moved up a little bit since then. Got a high back in late January, pushing $6, not quite hitting it, but getting close. And then kind of coming off again, settling out right around $4.72 right now. So all sorts of interesting here, Mr. Rock Lobster. By the way, they kind of were pretty much, lifting the offer on these. So they're gobbling these bad boys up. So part of the issue the strike is interesting in and of itself. It's an in-the-money strike. You don't see that happening too often. But again, there's kind of a dearth of strikes here. You got your 4 and your 5. So maybe he thought 5 was a bridge too far. What are your thoughts here, Mr. Now that you understand the concept of the July 4th calls, what do you think about 10,000 of these fairly in-the-money calls here with 18 days to go?
I'm saying that's bold. But yeah, I see, sometimes people just want to get long. I don't, and right now they look pretty smart. So, I don't know. I wish I knew more about this particular company besides just being a network company. But
that very vague
now, it looks like
vague description didn't fill it out for you.
Well,
we do this and that, and a little bit of this.
And the networking thingy, but that's why the stock is $4. If they just said we're a massive Chinese internet provider called Alibaba, you could figure out what that is. This one is like, what do we do? So they're in the money. They bought the bottom today. So how bad can it be? So probably looking for it's weird that you can put up 10,000 option contracts, but I'm just trying to look for the volume on the stock today. So the average volume of the stock is 1.2 million shares a day, and they put up 1 million notional in one print. So go figure.
Yeah.
Go figure.
Nice what you can do sometimes with options. Magical tools. They are indeed. All right, let's keep on rolling. We got some more newcomers coming up here on the odd blog, including our next one here. This is BP Prudhoe Bay Royalty Trust. I know everyone's favorite ticker they check in the morning. Ticker symbol BPT, closing today, $29.20, off about 70 cents on the day. This is the name that does, about 9,500 contracts. 1,200 contracts a day. Doing 9,500 today, 62-1. Calls over puts. Pretty much all of that volume, listeners, coming in like a funky multi-part spread. That's not quite as funky as it seems once you put all the pieces together. But they put it together. That could be another theme for the odd block today. A lot of small pieces adding up to something else. But this one was actually a couple parts. This looks like a SEP 30 DEES 40 spread going up, call spread here. The SEP 30 is going up $1.32, two different blocks, 2,000 times each, $1.33. So technically $1.32.5 on splits, listeners, 4,000 times total. And then 1,250 of the DEES 40 calls. By the way, those are on the bid. DEES 40 calls going up 50 cents. And then going up again for DEES. Oh, I'm sorry. Also splits here. DEES 30 calls going up 1,250 times for $2. Actually, it's a couple of strikes going up here. It was all sorts of weirdness. DEES 40s and DEES 30s going up. Let's get the total volume on the DEES as well because they went up in funky numbers. There we go. Find my screen. Well, here we go. 2,500 each of the DEES 30. So let's see. We saw SEP 30 calls going up with a DEES. Looks like a vertical DEES 30 40 vertical total of 2,500 times. Doing the 30s for about $2. Doing the 40s for about 50 cents. Looks like they could have potentially. Let's see. Well, the spread's so wide on the 40s, it's kind of hard to tell. But they could have potentially bought both of those. A little bit of a call stupid, if you will, out there in DEES. Worth noting, there is some paper, so this could be maybe closing the first two and then reestablishing on the 40s. The 30s have about 4,900 open, 4,000 going up there. The DEES 30s have about 3,200 open, 2,500 going up there, and not much open on the 40s. So it could be a case of, let's see, where do we close out today? 29.20. Maybe deciding those 30 strikes have done their business and time to close those out and reestablish up at the 40, keep the party going. Let's check in here and see how our friend BPT has been faring over the past year. And a year ago, it was right about $21, so about 8 handles shy of where it is right now. Got up to a little over 30, about 32, back about a month ago. And then it's kind of been vacillating in this range ever since. So it could go higher, Mr. Rock Lobster. I don't know if 40's in the cards. What are you feeling on this one? It went up kind of funky, multiple small parts for a more banal kind of conclusion here. Are you feeling closing on the 30s and rolling to the 40s? What are you feeling?
Doesn't it feel a little bit like they're kind of getting out of the SEP and then rolling into the DEES, looking to stretch this into a little bit more of a home run? Isn't this Prudhoe Bay, like Canadian tar sands coming to life again story? I remember this being like an $80 stock a couple years ago. So it's trying to get back to where it was with the price of oil. So I mean, it's had a pretty good run here. So it felt like they just want to buy a little more time, and they're quite happy to take the $9 if it goes to 40, or the $8.50 if it goes to 40 after this run. So it feels, I know it's kind of very mid-markety, but it's feeling a little like a house money roll out of SEP and then just trying to roll for more time for the same bucks or close to the same bucks. That's what it feels like on this one. So I think they looking for higher oil prices.
Would certainly be higher if that did indeed come to pass here, listeners. And if that wasn't enough of smaller chunks adding up into a larger whole, well, then we got you covered here in Flowers Foods Inc., ticker symbol FLO, F-L-O. Closing today, $20.50, off about a third, about 1.5%. This is the name that does about 500 contracts a day, whopping 500 today, doing 8,272, 132-1 puts over calls. That's because someone was putting up a whole bunch of puts in what looks like, after you add up all the crazy little pieces, a put roll from July to August. It was the July-Aug 20 put spread going up a whole bunch of times, and quite frankly, a ridiculous number of blocks of 187 each, listeners. So 187 Aug 20 put, 65 cents. 187 July 20 put, 16 cents. And so on and so forth, all the way up till they added up to a total of about 4,000 each. So 8,000 contracts net total in blocks of 187 listeners. So someone decided, I think, to annoy their broker today or make them earn their little pieces out there. Why we say it's a roll? Well, because it looks like there's about 6,000 open on the Julys and pretty much nothing open on the Augs. Let's see if we can go back really quickly and see when the July was open. Looks like the July was open back on May 15th when they were trading about 57 cents, between 40 and 57 cents. And the July today traded for 16 cents. So if they were indeed buying these puts, hoping against hope for something to happen, then perhaps not. But then again, that kind of size usually done against the stock positions. Maybe they're not too upset about it. Let's look here. Of course, they are buying very, very near-term protection, which is a little bit odd if you're a size stockholder and then rolling it from 1 month to the next. That's usually not the behavior you see of someone who's just sitting on a ton of stock and they want protection. They usually go a little bit longer term, maybe a little bit farther out of the money, but not rolling month to month like this. Let's look at a chart here and see what's been up with flow over the past year. And oh yeah, they were trading a wee bit lower about a year ago, at about $17, so about $3.50 shy of where they are today. They got as high as about 23 back in May, so they had a nice 6-handle range over the course of the past year, kind of in the middle of that right now. And looks like our friend here perhaps wanting to keep the hedging party alive. I don't know, Mr. Rock Lobster, this one feel kind of weird to you too. Usually if you got a big stock block, you're not just rolling every month, out of the money puts. If you are, maybe you want to reconsider your strategy a little bit.
I'm looking at this and I'm like, I thought it might have been a line in the sand play, but then it feels like they're dumping the near term, buy on the far term put. Maybe they're just waiting for Flowers Foods to be Amazon. I don't know. Are they one of those flower? Maybe that's one business Amazon will not get in. That flowery, that fruit basket thing that people send around.
This one, at least this description is nice and concise. They are a producer and marketer of packaged bakery products. So there you go. It's concise. It's not a 20-page description like the other thing was. That's nothing. So there you go. They do direct store delivery of their packaged bakery and snack cakes as well. Delicious snack cakes.
Snack cakes.
Maybe Amazon's coming for the snack cake bit. You never know where they got their sights set on next. Little Debbie, run and hide, baby. Amazon is coming for you. Either way, someone put together a heck of a lot of little blocks of puts here. This one has a weird feel to it, listeners. Keep an eye on this one. I'm going to put this on a to-be-marked category because I think something's popping off in this pretty near term. If they're going to all this effort and all this money to keep these puts alive for yet another month after they already eroded in their face. So we're going to keep an eye on good old flow and see if perhaps it materializes into something. Speaking of materializing, we're doing a little bit of a magic trick for you today, listeners, because it's Monday and you're saying, yeah, I know it's Monday, no strategy block, boo-hoo. No, you're wrong. Surprise. It's a holiday week, listeners, so you're getting it early. It's time for your dose of Uncle Mike. It is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
Welcome to the Strategy Block. This is the portion of the show where I say, what the heck is Uncle Mike going to talk about? Because we didn't really have a chance to put a poll up for him, so you guys didn't have a chance to vote on his dear desire to see him talk about the history of dance. That'll be for another time, perhaps. But Uncle Mike, we were not able to provide you with direction. You are directionless, sir. What do you got in your pocket for us today?
I got it. Making us do our own mute buttons. It's really crazy.
It's such hard work. I know.
This whole clicking a button thing. Well, I want to go through today my trading week a little bit from last week to kind of give our listeners an update on what I had talked about, not this past Thursday, but the Thursday before, and basically how I kind of dodged a bullet last week. And I did it just through being overly paranoid and being constantly scared, not sleeping, and never going to the bathroom. And that, my friends, is how you trade short put spreads, quite frankly. So last Thursday, or not last Thursday, but the Thursday before, Andrew had even talked about how the VIX had made a much greater move than what the overall market did for what it should have, meaning the typical ratio of how much the VIX should move in comparison to how much the market moved. The VIX had moved a lot. And so when I had done that with volatility going up as it did, I got out of a long call that I was in and I sold a short put spread. And so when I did it, of course, the worst thing that could happen is if the market were to either go way down and I get my face ripped in, or if the market goes higher and I don't get to participate on the overall market itself. So with that being said, that was the chance with which I was taking, with the VIX being much higher. Now, my thought on it was that, okay, let's say the market does go higher. I'll still make a pretty decent chunk of money because of the fact that I was able to sell the premium for a higher level than I would have normally been able to have done it. I will have just made my money off of time decay and volatility coming down, as opposed to just good old-fashioned delta. I'm fine with that. And I felt if the market were to go down, then I was able to manage risk and trade credit spreads in the manner with which I described 2 minutes ago, and we could live to trade another day if something like that were to happen. So with that being said, Friday, we didn't have much of a move. And then sure enough, the following week, Andrew's prediction came true. We did have the 50-point move in the market, and it was against me. Now, the good news about that was that the long call that I was in, I didn't hurt me at all. But the short put spread with which I was in, it did. I had initially sold the 270, 265 put spread on SPY, and it got to the point to where I had lost, or was in a losing position, to about what I was trying to get as a credit to begin with. So I got out of it. Now, with that being said, I still, considering the actual overall move of the marketplace and the amount of money that I had on the table of the overall portfolio, it was still relatively small. So what I was able to do, because I set it up this way, I ended up selling I was in a 1 week put spread, meaning it expired or was set to expire this past Friday. But then what I did was I ended up selling a 268, 265 Wednesday expiration put spread. Now, I didn't get a ton of money for it, but I got enough to where I had a little bit more cushion, a little more breathing room, and I had a little bit more theta working in my favor. So I ended up making some money on that. And then come Wednesday on the week for put spreads, I'm down roughly, I forget what it was, I'd have to look it up, but I was down roughly maybe 20 to 25 cents. So at that stage, what I was able to do, I believe I sat out a day, but then I was able to actually sell another 268, 265 put spread, and I believe it was Thursday. And then by doing that, I got a large enough credit to where I ended up making money on that put spread, because the market did rally a little bit from that point. I ended up being slightly ahead on the week. Now, here's the moral to the story, folks. The benefit of selling a put spread on a down day with higher volatility is that you can get into a put spread at that level where you normally would not have been able to. You'll get a little bit more premium. You can sell it further out of the money, whatever you prefer. So when selling a put spread, that's typically what I like to look for those reasons. Now, when you are selling a put spread, my opinion on this, you really need to have risk management in place. Now, last week, we pretty much broke even. I think I came out a tiny bit ahead last week, and then I ended up getting back into the long call at the end of the week at a lower level than I got out of it the week and a half before, which I'm still I think I'm slightly ahead on, maybe about break even on the long call again. But the point is that when you're selling a put spread, you need to constantly respect the fact that the market can rip your face off at one fell swoop. If you're trying to get maybe 50 cents for a $5 risk or something like that, you got to have your stop loss in place, or you have to have your contingent order, whatever way with which you're managing risk. As soon as you get to a point to where you're losing, let's say, and my personal rule is around the 50 cent mark. If you're wanting to get 50 cents, get out when you're about a loss of 50 cents. By doing that, it's never going to be perfect. Sometimes you'll get out at 48 cents. Sometimes you'll get out at 57 cents, whatever the case may be. But the point is that you don't want to wake up one morning and be down $6, or I'm sorry, in this case, $4 or $4.50. And whenever that happens, that takes a long time to get back. So let's say you're trading put spreads that go out 1 month. If all of a sudden you have a losing month, and a losing month for you is where you lose what you gained the month before, well, you can live to become ahead the following month. Whereas if you're down $4, that's going to take roughly a year possibly to make that money back. And that's not a good thing. So what I want to emphasize to everybody is that you need to have very strict risk management when selling a put spread. Oftentimes people think, oh, I'm a premium seller. The odds are that most options expire worthless and this one's going my way. I'm just chilling out. I disagree. Whenever I'm selling premium, I am way more paranoid than when I'm buying premium because I have more risk that could possibly go against me. Now, the beauty of selling the put spread is when it does go against you, you have some things that work in your favor, such as the long leg of the put spread, which you always hate buying when you sell the put spread initially, but that long leg can sometimes really help you when volatility goes higher and markets go lower. But with that, you a lot of times have flexibility to do a variety of different things, which I've talked about on the show 100 times, and which I talked about a couple minutes ago. But also, it only works if you have very strict risk management in place. If you wait until the market goes below the overall spread itself, it just does. You might as well just go to the casino, in my opinion, because you're just trying to bet on something that you don't have any plan for. So, moral to the story of the strategy today: whenever trading put spreads, be very paranoid about it. And understand that risk on those are very real, but if done right, they can be rewarding.
There you go. Be paranoid. Words to live by from Uncle Mike. As we keep on rolling, let's see if we can do a really quick mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. By the way, I spoke too soon earlier. The Florida gods have unleashed their rage upon the show with just sky blotting rain here. So thankfully, hopefully, it seems like everything still is up and running, which is amazing. Fingers crossed we make it through to the end of the show. Let's see. We asked you guys this week for our question. It's a holiday week. Generally, the vol fade is kicking in, and for a while there, it didn't seem like today was the case, but then it kicked in towards the end of the day. We said, traders generally fade vol when going into holidays. What's your favorite vehicle when you want to wager on the dark side of volatility? You can go short-term or long-term, whichever your preference is. That's up to you, but if you don't see your answer, of course, always hit us up. We love other suggestions. We gave you 4 very basic choices. You can short the VIX Futures. You can go long a VIX put or put spread. You can go long VXX puts or put spreads, or short VIX calls or call spreads. Mr. Rock Lobster, we'll start with you. What is your weapon of choice, and what do you think our audience is choosing, sir?
My weapon of choice most of the time would be VXX puts, because they really do offer a lot of return and bang for the buck. I'm going to say the audience is going to go VXX puts. I feel like they know that product is reliably crappy, and they're going to express that. We
have gotten out in front of that reliably crappy message for a long time now. It does seem to be resonating. Mr. Uncle Mike, what is your choice, and what do you think the audience is picking, sir?
Reliably crappy both ways.
There you go. Our audience right now is actually split evenly. Again, it just went live, so we got a whole week for this. I'm sure these numbers will move around, but right now 40% each between long VXX puts or put spreads and short VIX calls and call spreads. So interesting. 13% going the old VIX put route. Kind of boring, I guess, and by comparison. Only 7% you say you want to get dark side with the VIX futures. I feel you there. That could be a rough road to hoe if you're not used to it. Let's a couple of comments we can squeeze in really quickly. Oh, we were joking about Mexico, Maine last week, last show, I should say, Mr. Rock Lobster. And we had Spencer writing in saying he knows Mexico, Maine, too. A lot of people in our audience are all familiar, apparently, with Mexico, Maine. Who knew? He says, I know Mexico, Maine. That's out in, quote, the country, for sure. He says, and in Maine, that's saying a lot. So there you go, Mr. Rock Lobster. Mexico, Maine, on the top of the lips of our radio. By the way, speaking of Maine, I opened up my news this morning when I wake up, as I want to do every morning. What's the first headline I see? 95-year-old man battling a rabid fox in Maine? What's going on up there, sir?
You know what? It has been a crazy fox season because I think we had cool temperatures. This is weird because we had drought. We had a lot of acorns. We have a lot of squirrels. The foxes are going crazy eating the squirrels. And it's just one of those nature things. You got a lot of foxes running around and they're fat and happy right now.
So we get rabid gangbangers in Chicago. You guys get rabid foxes in Maine. You know, to each their own. As we keep on rolling, rolling into that 95-year-old guy took him out pretty easily. I think I'll take my chances with the fox as we keep on rolling into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right. Welcome to Around the Block. This is the portion of the show. Usually we tell you what we're watching until our next show, but it's going to be a special edition today because we're telling you what we're watching for the rest of this week because we won't be back for a week, listeners. Taking a little bit of the 4th off. So let's start with you, Uncle Mike. Give our listeners some things to keep an eye out for the rest of the week until we gather back here together next Monday, sir.
Well, I would recommend just kind of obviously continue to watch the market and monitor your positions, but folks, enjoy the holiday. It's 4th of July. This is the greatest country in the world. We have our problems, no doubt about it. Go out, watch a parade, watch some fireworks, and enjoy yourself. That's what I'm going to be watching. I'll be monitoring the markets as best I can, but I don't see a lot of activity. But if we do have any of it, I will be ready, of course. But in the meantime, happy birthday, America.
Yeah, I don't know you're talking about problems. There's no problems here. America. We got no problems.
That's right.
Nothing. Just have a hot dog and watch those foxes attack. When foxes attack, the hottest reality show in Maine right now. Mr. Rock Lobster, what should we be watching the rest of the week, sir?
I want to see if we can get out of this tweet cycle. Mostly I want to see this tariff thing come down to just kind of, all right, let's all agree to reduce tariffs. Everybody reduce tariffs and we'll be happy and then move on with some prosperity. And right now we're mired in this stuff. And I think that's really it. Option pits kind of we're off this week because, it's 1.5 days. The market's not even open. So we're using this time to take a little well-deserved break. But, I like to see just any of these, apparently negotiating trade deals is tough. So
who knew?
I don't think we're going to get out of zone 2 until one or two countries start to actually get serious about negotiating with this, because I don't think the way this guy does things, Trump-wise, he stops until until somebody starts saying, "Hey, listen, we're going to come to the negotiating table." So I only see more of the same until it's not. So.
Are you suggesting that negotiating a delicate thing like an international trade deal, Twitter may not be the ideal tool for that? Is that what you're saying to me, sir?
Well, it's certainly a new tool for it.
Yes, that's true.
I don't know if it works yet. I mean, it's being used. I mean, you could break an iceberg with a pickaxe, but it might take you a while. So I'm not quite sure if it is the right tool. It is certainly a tool to use for sensitive international negotiation.
Yes, this is the first time social media has been used to negotiate international treaties. We shall see if 140 or perhaps 280 characters is sufficient for all the nuance contained in those documents. All right, that music, listeners, means we have come to the close. Unfortunately, sad face here for today's and indeed this week's Option Block. We will be back on Friday for Vol Views and TWIFO, so stay tuned for that. Thankfully, we've been hitting you guys on the network with a bunch of great content. You got all the shows, you got the advisor's option hitting there, you got more stuff coming from the CIO forum, everything else. So you guys are not wanting for content, that's for sure. And we'll be back on Friday with more good stuff. But before we go, let's go back around the horn. Let's start with ye old Uncle Mike. He knows a thing or two about foxes. He's got one right on his website there. First off, Uncle Mike, hopefully that's not a rabid fox. And then what's cooking in St. Charles Wealth Management?
No, they're all friendly here in St. Charles. That's why we're the pride of the Fox, by gosh. So if you come to live in St. Charles, they're very peaceful foxes. But Yeah, check out my website. Sign up for my weekly newsletter, stcharleswealth.com. Definitely do that. We will be having some events in the near future, but we'll have more on that in the coming weeks.
You have a newsletter now?
Go to my website. Check it out.
When this stuff? Who is this Uncle Mike with the newsletter and the foxes? I don't recognize you anymore. Talking about selling put spreads. I don't know who you are anymore, sir. You are a mystery.
I aim to surprise.
You're doing a good job of it this week. All right, Mr. Rock Lobster, when you're not battling rabid wildlife, what is cooking in the land of the pit, sir?
Well, we're hoping that we're going to have our August juice for free. We have all our newsletter going, newsletters going, vol newsletter, all that stuff. Things are going along okay. So we're ready and able to teach people new stuff. But August it'll be finding how to create juice for free webinar, and it'll help people about long-term trading options as well. So lots of tricks to know on how to manage options, and that's what we'll be teaching you come August.
There you go. Check it out. Optionpit.com.
8th on a 10 lot.
There you go. An 8th on a 10 lot, or maybe a couple of thousand VXX 10 puts if you get them for free. You never know. So whatever works better for you listeners. And on behalf of the Rock Lobster and Uncle Mike, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, all the fun stuff that you do. Keep it up. We'll see you back here on Friday, not for the option block, but for Volview. See you back here for the option block, but next Monday.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.